Today, I want to talk about the grocery retail landscape in Malaysia from 1950 to 2025. Grocery retail is a traditional industry, mature and saturated today, with annual growth of only about 3 to 5%. As investors, we know real opportunities often come from new, high-growth sectors. But to understand where the next opportunity lies, we need to see how the industry has transformed over time. In the 1950s and 60s, right after World War II, grocery retail in Malaysia was run by small, diverse players. Wet markets, night markets, sundry shops, and shophouses dominated. There were no large chains. Consumers shopped daily or every few days. Prices were negotiated, and personal relationships with shopkeepers mattered more than branding. By the 1970s and 80s, early modernization began. Local provision stores and supermarkets started appearing in urban areas. Giant, for example, began as a small provision store and expanded into a supermarket and later a hypermarket chain. In this period, fixed pricing replaced bargaining, and packaged goods became more common. Still, wet markets were the main source for fresh food. The 1990s and 2000s marked the boom of the hypermarket era. Hypermarkets like AEON entered Malaysia in 1985, and Tesco, first hypermarket in 2002, transformed shopping. Malaysians shifted to bulk shopping on a weekly or monthly basis. Wet markets started losing younger customers. Big players adopted a buy-and-build model, owning land and constructing massive malls with both food and non-food sections. Weekend shopping trips became a family event. By the 2000s, hypermarkets dominated urban grocery retail. Carrefour, Tesco, Giant, and AEON were household names. Local chains like Mydin and EconSafe competed on price, while NSK Trade City introduced wholesale formats. We saw credit card promotions, loyalty programs, and aggressive price wars. Chains expanded into suburban and secondary towns. But once the market reached saturation, cracks started to show. Around 2010, the mini-market and convenience store revolution began. 99 Speedmart grew rapidly, from just over 100 outlets in 2000 to more than 1,000 by 2016. KK Supermart tapped into urban, late-night shopping. These stores thrive by renting small shop units in neighborhoods, offering everyday essentials close to where people lived. With rising costs of living, consumers shifted to smaller, more frequent shopping trips instead of big hypermarket runs. Meanwhile, hypermarket expansion slowed due to high operating costs and competition from these smaller formats. From 2015 onward, Malaysia's grocery retail landscape diversified. Premium supermarkets like Jaya Grocer, Village Grocer, and Ben's Independent Grocer expanded in affluent urban areas. EcoShop introduced the dollar shop model, offering products at fixed low prices. NSK Grocer launched in 2022, positioning itself as an affordable yet premium supermarket. At the same time, online grocery platforms such as Happy Fresh, GrabMart, and even short-lived Honestbee gained traction. The cake of grocery retail kept growing with population and income, but it was now being divided among more and more players. According to Gourmet Pro, Malaysia's grocery retail market was valued at $14.5 billion in 2023 and is projected to reach $18.6 billion by 2028. Growing at about 5% CAGR. Modern retailers now account for over 75% of the market. Notable trends include growth of premium supermarkets catering to affluent shoppers, strong rise of e-commerce and quick commerce, as consumers get used to online grocery delivery. The growth of Malaysia's grocery retail industry has been driven by four key factors. 1. Population growth, 3 million to 34 million. 2. Rising household income. 3. GDP per capita increase, $1,000 to $11,000. 4. Urbanisation. These factors expanded the size of the cake, attracting new players at every stage. Imagine the grocery retail business as a big piece of cake. In the 1950s and 1960s, this cake was shared by wet markets, night markets, shop houses, and sundry shops. Each small player only enjoyed a small slice. But as Malaysia's population, household income, GDP per capita, and urbanization grew, the cake became larger, attracting bigger players eager to take their share. By the 1990s and 2000s, giants like Giant expanded aggressively into the hypermarket format to capture market share. Smaller retailers, unable to compete, began disappearing. Hypermarket chains also moved into second and third-tier cities, further squeezing out traditional players. Still, the buy-and-build model and the complexity of supply chain management limited hypermarkets from penetrating rural and suburban areas completely, leaving some breathing space for smaller shops. From the 2000s to 2015, mini-markets and convenience stores began to rise with an asset-light model. By renting shop units in rural towns and neighborhoods, and supported by increasingly efficient supply chains, these stores operated at lower cost than wet markets and sundry shops. This made survival even harder for traditional players. For example, 99 Speedmart grew rapidly from just over 100 stores in 2000 to more than 1,000 by 2016. Today, it operates nearly 2,900 outlets nationwide, covering urban, suburban, and rural areas. Mini-markets and convenience stores claimed a bigger portion of the cake, leaving hypermarkets with smaller slices, while wet markets and sundry shops were reduced to crumbs. To survive, hypermarkets had to adapt their business models and improve efficiency. Those that could not, exited the market. From 2015 to 2025, rising household income has fueled the growth of premium grocers such as Jaya Grocer and Village Grocer, which expanded rapidly in city centers. New formats also entered the market. EcoShop, backed by Creditor, introduced a dollar store model selling smaller size products at RM2.60, while NSK Grocer, launched in 2022, positioned itself as an affordable yet premium grocery concept. Both companies represent fresh strategies to capture slices of the ever-growing cake. During the MCO period, many small grocery shops emerged in cities as consumers cooked at home and avoided crowded spaces. However, most closed once restrictions eased, proving that large retailers still held the advantage with stronger procurement, supply chains, and operational efficiency. At the same time, consumer behavior began shifting online. In 2023, about 14 million Malaysians spent $363.2 million on food and beverages online. While online grocery remains a small share of the market, since many still prefer shopping in physical stores, it is a trend worth watching, especially with the rise of e-commerce and quick commerce. In conclusion, Malaysia's grocery retail market is fiercely competitive. Over the decades, new players with innovative business models have continuously entered to claim their share. Yet, as a mature industry, long-term survival depends on operational efficiency, supply chain strength, and the ability to maintain margins in an ongoing retail battle.